Welcome to Captive of the Week, a series where we catch a glimpse of the secretive world of onshore captives and how they have used the Terrorism Risk Insurance Act to shift billions of dollars off of their balance sheets and onto yours. This is your host, Jason Shoup, founder and managing member of the Centers for Better Insurance. This week, our captive is Midtown Insurance Company. The New York Times Company incorporated Midtown Insurance within 8 months of the Terrorism Risk Insurance Act becoming law. The New York Times Company capitalized its newly created insurance company with some cash, a $275 million promissory note, and rights in its New York metro area subscriber relationships, which is a fancy way of saying customer lists. The New York Times Company then transferred ownership of Midtown to its Delaware subsidiary, NYT Capital. Midtown has issued several different types of insurance coverages to the New York Times over the years. From the start and ever since, Midtown has served as the terrorism insurer for the New York Times. As of December 31, 2012, the latest information available, Midtown provided the New York Times with $1.2 billion of terrorism insurance, including against nuclear, biological, chemical, and radiological attacks. While it's difficult to determine Midtown's exact deductible under the Terrorism Risk Insurance Program, it appears to be in the range of $9 million. That would mean if the New York Times sustained $1.2 billion of property loss and business interruption from a terrorist attack, the federal backstop would pick up $960 million of that loss. In turn, U.S. Treasury would send small businesses, nonprofits, local governments, and other commercial policyholders a bill for up to $1.3 billion in the form of policyholder surcharges. Midtown Insurance has been wildly successful. Over its first decade of operation, it has taken in nearly $400 million in premium, but incurred only $15 million in losses. That is a 4% loss ratio, while the property and casualty insurance industry as a whole runs a loss ratio in the mid-60s. Over that same time, Midtown's policyholder surplus, the capital that it holds, has grown to over $500 million. To put that into perspective, at that time, Guide One Insurance and Church Mutual each reported about $500 million in policyholder surplus. Western National Insurance reached this threshold just last year. Given the success of this operation, you might think the New York Times would be talking up Midtown Insurance Company. The New York Times identifies Midtown as a subsidiary in its annual report, but says little else. It tells its readers even less about its insurance business, having disclosed it only once in an article observing that captives may seem too good to be true. Its secretive $960 million interest in the Terrorism Risk Insurance Program and the $1.3 billion exposure it has shifted onto the balance sheets of its readers has not stopped the New York Times from regularly reporting on the program. In perhaps the most surprising example, the New York Times ran an op-ed arguing the program, and presumably Midtown's participation, should be made permanent. Not only did the newspaper omit to disclose its interest in the program, it also failed to mention that the author of the article is Midtown's regulator and indeed would conduct an examination of the company 18 months later. This secrecy around terrorism captives is good for no one. The New York Times wants to be upfront with readers about its conflicts of interest, such as its relationship with its op-ed contributors and its financial interests in the federal programs on which it reports. Its most senior executives were well aware the New York Times owned an insurance company regulated by the New York Insurance Department and that had shifted nearly $1 billion of risk into the Terrorism Risk Insurance Program. But that information did not make it to the newsroom. By the way, Midtown's board consisted of the New York Times General Counsel, Financial Controller, and Treasurer. A public registry of all insurance companies participating in the Terrorism Risk Insurance Program would have ensured newsroom staff could have disclosed their organization's conflict of interest and would have allowed others to hold the newspaper to the same standards it holds everyone else. You can learn more about the Terrorism Risk Insurance Act and terrorism risk captives at betterins.org. On behalf of the Centers for Better Insurance, thank you for spending this time with us.